What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Nio, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So it has been a little while since I covered Nio, just over a month to be exact, and the last time we spoke, I told you that I was no longer a buyer. The stock has since made a new 52-week low at $7.33, and despite recovering a little, the stock is still down 17.23% year to date. The earning call for Nio is set to take place on June 9th, so still a few weeks out, which then brings up the question on whether or not my view on Nio has changed. And so in today's video, I'll briefly go over some of the latest news on Nio and why the stock is down, then review the latest price targets, and I'll close with my answer to how I'm approaching the stock from a buy, sell, or hold standpoint. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So then, the Nio stock just can't seem to gain any traction. Yes, it posted a 1.51% gain this past week, which is welcomed, but it lost another 8.19% since the last time we spoke about it. The main reason for this funk Nio finds itself in is due to the delivery numbers posted in April. Nio delivered only 6,658 vehicles, representing a 31.2% increase year over year, which sounds great until you realize that this number actually represents a 36% decrease on a month-over-month basis. Basically, Nio is still struggling to regain sales momentum. There are a few factors at play here, but the two biggest ones seems to be one, Tesla's price cut, and two, the fact that Nio is transitioning to its new EV platform for most of its lineup, except for ET7, and consequently, many prospective buyers would rather delay their purchase so they receive the latest and greatest. Investors are picking up on this and have adjusted their position accordingly during Q1. For example, CalPERS, the US largest pension fund, cut its position in Nio by 15.02%, or 390,806 shares. This makes the second quarter in a row where they are trimming. Bridgewater, which is the world's largest hedge fund, cut its Nio position by 40.53%, or a little over 2.5 million shares. They too have now sold for 2 quarters in a row. Now, with that said, it's not all doom and gloom. Yes, CalPERS and Bridgewater are big players, but when it comes to Nio, Bailey Gifford and Renaissance hold significantly larger positions. And here's what I mean by that. The Renaissance hedge fund holds more shares than Bridgewater and CalPERS combined, with 10,791,394 shares. They kept their position virtually unchanged. Bailey Gifford, one of Nio's top 3 largest backers with a little over 120 million shares, also held virtually steady in Q1 2023, after increasing their position by 25% in Q4 of last year. The main takeaway here is that those with the longer term view at the institutional level are either adding or holding steady, while others who are more focused on the short to mid-term are selling to better guard against further downtrend. Now, setting the stock price aside for just a moment, Nio continues to take the needed steps to strengthen its supply chain and be ready to ramp up when momentum returns. The latest partnership they signed is with Swedish company Autoliv, the world's largest manufacturer of seatbelts and airbags. Earlier this month, they also entered into a new partnership with Dutch-based company NXP in order to leverage their 4D radar technology. The benefit here is finer resolution and capabilities beyond the technology Nio uses today. This will enhance their safety feature in virtually all weather and light conditions. The last piece of news worth highlighting besides the launch of the next-gen ET7 and ES6, well, it's on the European front with the very first of many battery swap station launch at a Shell gas station. Shell and Nio entered into a strategic partnership back in November of 2021 and have since been rolling out battery swap stations across China. They are now expanding this to Europe, which is a big deal for continued adoption of EVs and Nio specifically, as battery swapping is a big part of the value proposition of buying a Nio car versus the competition, right? The bottom line here is simple. Nio is still full steam ahead when it comes to execution and doing everything they can to increase their market share in the European market. Their success in Europe is a key stepping stone to launching in the US come 2025. And so really at this point, you now know why the stock price is struggling to get positive traction, but should also realize that the company itself is continuing to lay down the groundwork for long-term success. Interestingly enough, despite the bearish price action, the actual consensus rating and price targets remain unchanged. As a reminder, that is a consensus rating of a moderate buy with the following breakdown: 6 buy ratings, 3 hold ratings, and still absolutely 0 sell ratings. The median price targets held steady at $14.92, which implies an 84.88% upside from current levels over the next 12 months. Again, not unrealistic given the fact that the Fed is set to pause next month and rate cuts are expected early next year. The top end of the price range remains unchanged at $25 and the low end is also unchanged at $10. For full context, and this is important, if we hit the top end of the current projected range, that's a 300% gain from current levels. That's definitely something I'm not personally losing sight of. This then brings us to how I'm personally thinking about Nio. Should I buy more? Should I continue to hold? Or is it finally time to sell as others have done to minimize the downside risk? Selling here at this point seems like a much bigger liability than buying. I still believe in the long-term prospect of Nio, and so with that mindset, crystallizing the losses doesn't make sense to me. Conversely, though the valuation is really attractive at these levels, I do feel fairly confident that we're not out of this rut just yet. Investors, small and large, are going to want to hear what Nio has to report for Q1 2023. I too want to know. But more importantly, how they guide for the remainder of the year. Main reason being that we need to see if Nio backtracks on the previous bullish guidance, or do they double down? So then for me, the approach at this point in time continues to simply be hold. I'm allocating my capital to other positions that could yield better returns in the near term, namely Virgin Galactic, which should see its long-awaited start of commercial operations at the end of June. That's not very far. The last thing I will say is this: though I'm still cautious on Nio and I have not added to my position in just over a month now, I do believe that it will soon be appropriate to resume buying to take advantage of these lower prices. Again, a Fed pause is just right around the corner and could actually shift in a positive way the momentum market-wide once officially announced. For that reason, lowering my average on Nio a bit further in the coming weeks before that happens would be a smart move. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.